I be in the zone, gazing at the walls, depressed, digging the phone. They take it personal, but only a mind if you could understand what a nigga feeling. 41st till I die, motherfuckers. I'm still breathing you with blood, so we full bread. You ain't my dog trying to infiltrate the clique issue. I get with you into that on a later note. We overdose every day to death, we so close. I'm trying to tell these cats, but I let them do their thing. Ready for the bad news till the phone ring. Son is dead now, and wait over my head. Seek your revenge, son, bitch, son. On your behalf, trying to laugh out the drill gun. Conceal guns, play the hum. For real sons. For you motherfucking hoes.
Hello everyone, welcome to another live stream. So I hope everyone is doing well and I hope you guys can hear me okay. So let me set up the chat. As always, I do have the chat open on the side, and for any questions, any requests, you guys can put it in the chat. I'm constantly monitoring that, so yeah. The chat is open. So last week I think I did the stream on a Friday because it was NFP Friday, and this week we're back on Thursday. I'm actually thinking of just sticking to a Thursday because I seem to be getting more engagement that way, right? So let me also check again if this is working. Okay, should be working. Hey Kevin, what's up? How are you doing? So let's get into the stream. And yeah, Kevin, I've just finished doing the thumbnail for our video, for our interview, and I'm gonna edit the video, I think, later today. So I think it turned out great, and I'm very excited to release it. So for all of you guys that are watching, Kevin is a Darwinex trader, one of the top ones on Darwinex actually, and we did an interview on my channel where we went through his strategy. He has a very interesting strategy of basically taking the opposite of some very popular trading robots. Okay, so doing the exact opposite of what most retail traders are doing. So Kevin says shorting my VAR at the moment. Okay, cool. I'm not exactly sure what that means. I know that's like a statistic on Darwinex, but I'm not sure how you can short that to prepare for gold. Okay. Yeah, I'll break down silver and gold in the stream, but let's first check out what has been happening in the week. So I want to break down some fundamentals first, and the best way for me to do that is here using the Edge Finder software. Okay, so I'm gonna focus on the US economy. I'm gonna go to the US heat map, And we had some numbers come out, okay? So we had some numbers come out. This is kind of a summary of what has happened in the last few weeks with the United States news. You can do it on your own, you can do it manually, but I mean, the Edge Finder does a very good job of placing everything in one software. So we had NFP, we had the non-farm payrolls last week. They came in bullish for both the US dollar and for the stock market, okay? So that came in bullish. Then we had CPI inflation print yesterday. That came in bearish for the dollar, but bullish for the stock market, meaning bullish for the economy. But inflation seems to be going down. Okay, so if inflation is going down, that means the central bank can actually cut interest rates. Okay, the central bank can cut interest rates, meaning basically the value of the dollar should go down. Okay, and then PPI, we had PPI today. I'm not sure why it is neutral, because if we go to the Forex calendar, as far as I noticed, PPI actually came in lower than expected, okay? And that is the change in the price of finished goods and services sold by producers. You can see the actual greater than the forecast is good for the currency. So the actual number worse than the forecast is bearish for the currency, okay? So maybe the Edge Finder still needs to update the number here for PPI. But basically, a lot of numbers are coming in pretty bearish. A lot of numbers are coming in pretty bearish for the US dollar. So we can see once this updates, this PPI number, once this updates, I think at the end of the day it should update. This should become bearish and the impact should become even more bearish for the dollar. And that's kind of reflected in the price as well. Let me see if I got the trading view now. Okay, yeah, I do. If you look at the strength of the US dollar on the daily chart, you can see the dollar is just losing a lot of value. Okay, so this is the dollar index, and the dollar index represents the relative strength of the dollar to other currencies. Okay, so if this thing is going down, that means currencies such as euro dollar, pound dollar, Aussie dollar are all trending higher, are all going to the upside. So I can definitely spot the trend line here, and it's just super bearish. Now breaking this swing low. If you zoom out even more, if we go to, let's say, the monthly chart, I can see that we're trying to break out from this swing low, and we could go lower all the way to here possibly. So if we do break these levels with conviction, you know, if we do break them, we could go lower all the way to this level of support. I can see that happening. So my current bet is long the euro dollar, long the pound dollar. Let me just see. I forgot to check for entries on EU. Okay. Long here, long on the pound dollar, long on the Aussie dollar, and pretty much long on anything that is short the dollar, right? So Bitcoin, Nasdaq, silver, gold, those are all of the things that are paired with the dollar. And if the value of the dollar goes down, that means most of these things should actually trend higher, should actually trend to the upside. Okay, so in terms of trades, let me break those down. So we kind of covered the fundamental situation. We covered the macro situation, what is happening currently. You're getting weak dollar news, you're getting a risk on environment. So the US economy is doing okay. The US economy is pretty healthy overall, which should be bullish for US stocks, right? Should be bullish for US stocks. Gold, kind of neutral right now in my opinion. So Kevin mentioned in the chat that he's preparing for gold. I personally am waiting for a little bit more. I'm gonna talk about it later in the stream. But gold right now is kind of flat and kind of neutral right here. Okay, kind of flat and kind of neutral. I'm waiting for a bit of a catalyst to push the price higher, possibly, to do this. That's what I'm waiting for a little bit of a catalyst to get in on a setup on gold. Some trades I do have running is NJ, buy setup right here. I did take half of the position off when we touched this high. Okay, so when we touched this high right here, I took half of the position off. I let 50% run, and I'm just trailing the rest of the position with a trailing stop loss. So I think when we were at these highs, it was around a 3-to-1 risk to reward for the first 50%, and now running a bit lower. Let me just go get a glass of water and I'll be back. Okay, we're back. So yeah, that's the game plan for NJ. It's been a pretty good trade. I got some nice profits on both the personal and on some of the challenges I have, also Darwinex. So right now, just keeping the position. Another cool thing about this is you're getting paid positive swaps. So if we go to, let's say, the Edge Finder, and we go to the carry trade scanner, okay, it's currently should be updated. So it's currently not working, but basically it's all about the interest rates. So the New Zealand dollar has a higher interest rate than the Japanese yen. So if you go long on this pair, if you buy NJ, if you buy US dollar JPY, if you buy the Euro JPY, you actually get paid positive swaps, right? And so far, I think it's been, a couple of euros per day, depending on which account you're looking at. Maybe like less than a euro on the personal account, and maybe a couple of euros on let's say an FTMO account, right? So you're actually getting paid a little bit to stay in a buy position. That's why I don't really mind holding this trade for a long time, right? I could hold this for months. I mean, if the price just decides to kind of range around here, like this, I can just keep holding the trade. Maybe eventually it does reach the target. Or maybe after, I don't know, 1 or 2 months, it just decides to crap lower and stop me out. I'll still be not so bad. Let's say I'll still make some profits, or more profits than I would on a different pair because of those positive swaps. So I hope that I explained that correctly, because positive swaps are a pretty cool thing if you know what you're looking for. Something that I mind holding for a bit of a longer time is this trade. So I did take a buy setup on Bitcoin. Okay. I took a buy trade on Bitcoin. I think it was this week on Tuesday. Yeah, so this week on Tuesday. And let me tell you why. So if we go to here. So first thing was that risk on environment is bullish for Bitcoin. Okay. So if it's a risk on environment, that means the US stock market is doing pretty well. So I was looking for buy setups on the Nasdaq, the US 30, the DAX even, S&P, the Russell, which is the 2000 small caps in the United States, and Bitcoin as well. So risk on environment was a plus. Second thing was fundamental data. Okay, so if you take into account all of the fundamental data that is updating, and if you look at, for example, the Edge Finder, you can see that Bitcoin is a pretty good buy setup in terms of, okay, not so much the commitment of traders and the retail, but seasonality is good. So June seems to be a good month for Bitcoin. Trend, that's a technical indicator, but okay. GDP is good, PMIs are good, retail sales, inflation is good, employment change, interest rates. So we're getting a pretty fundamental bullish reading right here. And the daily chart looks okay. So, I mean, we touched the all-time high. We're very close to the all-time high now. We had a bit of a pullback, so I didn't just blindly get in straight on the top, which is not the smartest idea. You want to try to first wait for a bit of a pullback and then to get in. I did want to get in a bit lower in this move, but there was no opportunity. There was no flags. There was no break and retests. There was no high probability formation for me to get in. So unfortunately, I could not find an entry, but I did find it on Tuesday. I found a nice break and retest. So I was considering possibly a flag. This is something that we teach at Zentum Trading. It's pretty much a clean break and retest. So first high, first low, second high, second low, blue candle is the entry candle. That was the flag, but I kind of wanted to get in a bit lower. So I placed the buy limit at this top of the inside bar, right? This small inside bar right here, right there, and then I got taken in. So this trade is running in drawdown, kind of close to the stop loss as well. You know, it's not that far away from the stop loss. One thing I don't like about holding Bitcoin is I'm getting charged some pretty high fees for holding Bitcoin, okay? For example, on NJ, I told you it's a pretty smart thing to hold a buy trade. Holding a short trade, it's pretty expensive, but holding a buy setup, you get paid swaps, you get positive swaps. So I can hold this for months. I would prefer to even hold this for a year. You know, it would be an extra 100, 200, 300 euros if you held it for let's say 1 year on your personal account, which is cool. But for Bitcoin, I'm paying around, I'm not sure how much in percentages. I know the value in euros, but I'm paying a pretty big amount on my personal account. Okay, so let's say I'm risking 100 euros. I'm paying around I think 0.7 or 1 euro every single day as the swap fee. I still need to calculate it because on Wednesdays you have triple swaps, so it may be a bit lower. But again, if I'm holding this for like 2 or 3 months, if I'm holding this position for 2 or 3 months, it's gonna be quite expensive. In 2 to 3 months, you can get some fee accumulation. Let's say you hold it for 2 months, so that's 60 days times, let's say it's, I don't know, 0.7 euros. It's like 42 euros of fees, and my full risk is around 100 euros, you know? So that's quite high, and I wouldn't really like to do that. Hopefully Bitcoin does something. Hey Alafi, how's it going? Hopefully Bitcoin does something so that I can maybe lock in some profits, or hopefully it stops me out pretty quickly so that I don't have to hold this position for a long time. I also thought about maybe not even going through my broker, but buying it on a Ledger wallet, right? Because I do have a Ledger wallet where I do have some crypto as a long-term investment, but then I would lock up a lot of capital on that Ledger wallet, and it doesn't make sense for a short-term trade that's gonna last for a few weeks. Best decision was to just enter on the broker and pay those stupid fees. Another setup I do have is the pound dollar, which is not doing that bad. It's actually doing okay. I think I took it last week, so I must have commented on it last week, but let me repeat why I'm in this trade. So from here, let me do a repeat of why I like this setup. So at this point, we were getting some very good fundamental data. Okay, if we go to the Edge Finder, if we go to, come on, UK. So you can see pretty bullish reading for the pound. Pretty bullish reading. It was even better last week because today we actually got some GDP numbers. See, this is the 12th of June. It's in Croatian, so ignore that. But it is the 12th of June. The yellow numbers are the numbers that have been updated in the last 7 days. 12th of June, GDP, you got a forecast of a contraction in GDP, but the actual number, the contraction number was even bigger. So it was a kind of a big surprise, kind of a bearish indicator. And you can see then it's negative for the pound, negative for the UK stock market. Still, we're getting a bullish reading. Last week, it was even better without this GDP reading. So we were getting some very good fundamental data. The uptrend on the daily chart looked okay. I would say it looked pretty strong. I liked the moves. The pullbacks were okay. We had the 20 MA. You had the price just kind of staying above the 20 MA, pushing into it, quickly retracing, pushing into it, quickly bouncing away. And also we broke out of a key resistance level, these two highs. So I thought this was a pretty good opportunity to get in. Dropped it down on the 1 hour, found the flag. I'm gonna have to say this was not the prettiest flag. It was pretty bad, but I didn't mind it because of all of the overall confluences that we had. So overall, I do think this was a pretty strong trade, and you could take some pretty, let's say, shitty entries. Pretty shitty entries. Got in. Right now, running a little bit of profits, maybe like 0.3%. I was in with a massive stop loss. Almost got taken out on 10th of June. So magically still in. Game plan, trail the position. If it does go up, I'm going to trail the position. The swaps are not that big. The swaps are not really a big issue. I would, of course, like to see this continue going up. And then I would just trail the position accordingly, right? Any targets that I have, because it's kind of smart to have some targets. Well, you could have this area as a first target. Right here. Let's see it. On the daily, where would that area be? That's pretty close. I think this area is much better, much more powerful. See? This high right there. I think that area is a nice area to at least take 50% of the position off. You know, at least 50% off. And you can trail the rest. Same game plan I had for the New Zealand yen. So if we can do that, if we can get all the way to those levels, I mean, that would be a pretty good risk to reward play. That would be really nice. So I'm not sure if that's going to happen. That's kind of a big risk to reward. But it's a good area to aim. The main plan is to just trail the position. So my favorite thing is just trailing the position, letting the market run, getting in on those uptrends or downtrends, and squeezing out the most that the market can give me. So Elafi says, last 2 to 3 weeks was very hard with Trump tariffs and so on. Do you trade normally in that kind of environment, or do you take a break? By the way, I'm still in my Euro Aussie trade. I was so early, but now all good. Are you in the Euro Aussie buy or sell? I don't remember. I'm sorry. I know you probably mentioned it in a last live stream. Euro Aussie, the daily chart. Let me see the bias. Top setups. Euro Aussie. In a buy. Okay, cool. Bullish. Some okay numbers. Okay, kind of mixed. Daily is kind of flat, but yeah, definitely lately you've been getting some good movements. Let's also see what about the Euro heat map. it's okay. The euro was getting some okay numbers, right? Around 57% of the numbers are coming out better than the forecast or better than expected. So for your question, I just trade normally. I mean, it's pretty tough with the Trump tariffs. One week it's huge tariffs. The other week it's we're gonna have a deal. Then the next week we get a 50% fixed tariff on China. And then the week after that it's a tariff pause. So yeah, pretty problematic, pretty volatile. I just ignore all of the, let's say, news about tariffs. I ignore all of the hype around it and I focus on the fundamental data. So pretty much the same thing that Trader Nick does. It's impossible to predict these tariffs. The market started to ignore them as well, right? So when we currently get news about tariffs, when we currently get news about tariffs, it doesn't really get reflected in the markets. You know, the markets are just the best indicator is the S&P, and the markets are just continuing to grind higher. They're moving higher and not really pulling back much. So I don't think any tariff news, except if it's like extremely bearish, is gonna rock this boat, right? So what Trader Nick does and what I'm doing is just focus on fundamental data, focus on the trends, focus on the price action, see what's moving, and try to follow it. So if the S&P is moving up with no real big signs of stopping, then it's a good thing to be bullish. Also, the US economy is doing pretty well. A lot of people said that the US is going to enter a recession, that there's going to be a huge, let's say, a huge problem with jobs numbers, that everything will become extremely expensive, that the US GDP will start contracting. Well, currently you're getting some healthy US numbers and things are still looking well. So there's no reason to panic, which is being reflected in the markets as well. Nice risk on environment. So hope it continues with my idea, but the Edge Finder is really helpful. Yes. Yeah, Edge Finder is great because instead of doing everything manually, you can just calculate it, or the Edge Finder can do the calculations automatically, right? And it happens like this. So it's pretty quick. Also, if you guys want to get the Edge Finder, you can use my code, which is MARKO, and you can get a nice discount. You can get a nice discount on your purchase. Yeah, no worries, Alaf. If you have any more questions or any more trade ideas or any more pairs you want me to break down, you can just put them in the chat. So those are the 3 trades I have running right now. Let me just make this a bit bigger. NJ, Pound, and Bitcoin. Some things that I'm looking at is the oh my god, the DAX, the Nasdaq, Dow Jones, silver. Okay. So for the DAX, let me also check if the stream is doing well. Okay, the camera is moving. Last stream we had some issues with the camera. Looks like for this stream that's sort of fixed. Anyway, the DAX, I'm waiting for this area of support to be retested. All right, this area looks nice. A little bit of an issue is that the Edge Finder is currently neutral on the DAX. So this is the German stock market index, DAX 30. Is it DAX 40 now? I'm not sure. I think it's still DAX 30. But anyway, 30 of the biggest German stocks. Yeah, see, the bias currently is a bit neutral. So I would first need for the bias to become bullish, for the fundamentals to become bullish, and then I would start considering buy setups. In terms of areas, in terms of technical analysis, I have this area of support as the area that I would be looking for buy setups. I think this is pretty strong. I think the prices or could get defended at this level. Fix the AC. and then I would get in. So once I get a bullish reading, once the price activates my price level, I'll be looking for entry setups on the 1 hour chart like this. Nasdaq, I'm looking at this level right here. Okay, I'm looking at this level right here. It's kind of a good support level. I've been trying to get in on a buy setup on the Nasdaq for weeks now. The price is just running away without me. I do have, fortunately, a long-term investment in the S&P 500, so I'm not completely missing out of this amazing opportunity that we had in the last couple of months, and it definitely was an amazing opportunity. I mean, these drops, they come every 3 to 5 years, you know, so every 3 to 5 years you get a great opportunity where the markets drop 25%, you get a massive discount on absolutely everything, and it pretty much corrects in the next few months all the way to the all-time high. So if you can be a buyer during the drop, if you can get in during the correction, you can get a lot of stocks for a very cheap price. Very, very cheap price, and then the markets continue. So I wish I bought more. That's what everyone says. But when you get a market condition like this, when you get a massive sell-off like this in stocks, it doesn't come very often, and you kind of need to exploit that, right? You need to take the opportunity to get in on this volatility, because when we capitulate, when we find the bottom, the uptrends tend to be very powerful, minimal pullbacks, very fast. So it makes sense to either buy some long-term stocks or try to get in some short-term trades along the way. I personally didn't do it, or I didn't get in any short-term setups. I was just a bit too patient. Right now, the opportunity is not that great, right? We are almost at the all-time high. The risk to reward is nowhere near as good when we were, let's say, here, where you could have a tight stop loss and aim for the highs. If I'm going to be buying here, the risk to reward is not that great. If we do pull back a little bit, then I could see some plays, such as having the stop loss underneath this low, aiming for this high right there, taking half off possibly when we reach the high, letting the rest run with a trailing stop loss. So that's a good play in my opinion. And that is something I will be considering for the Nasdaq, right? US 30, or also known as the Dow Jones. So for the US 30, I first would like to see a bit of a breakout to the upside. We do have a bullish reading actually. Whoop. If you go to the Edge Finder, you do have a bullish reading for the US stock market. Pretty much every index. So S&P, Nasdaq, DAX, Russell. See the Dow Jones. Very bullish. Really good numbers out of the States. Seasonality is good as well, meaning the US stock market likes to go up in June. So there's usually a saying, a classic saying for the US stock market, I think, sell in May and go away, right? Sell in May and go away. But lately, if you look at the monthly seasonality, go in with the Dow Jones, that hasn't really been the smartest approach to trading. You know, that was a trading edge that used to work, let's say, a decade ago or 2 decades ago, but currently you have May, June, July, August, all of them tend to be positive on a 10-year average, right? So 10-year average, all of these months tend to be positive. So that's pretty good, and you need to watch out for that expression, sell in May and go away, because it's currently not working. So I like the Dow, but I would like to see a bit more momentum and then a retest. Then I would look for entries on the 1 hour chart. Very simple stuff. until I do get a bit more momentum. You can see my price alert is right there, and until I get more momentum, I will be patient. One thing I do like more about the Dow Jones than, let's say, the Nasdaq or the S&P is that Nasdaq is near the high, near the all-time high. S&P is near the all-time high as well, okay? But the Dow Jones is actually pretty far away from the all-time high. You know, it still has around 5% until it reaches the all-time high. So there is a bit of a gap. There is a bit of room for the price to go up until it hits that major level of resistance, right? Same thing for the Russell. See, the Russell is quite a few percent away from the top. 15%, so there is a lot of opportunity. If you can get in on the Russell with a tight stop, there is a lot of room for the price to go up. See, so the Russell and the Dow Jones may be lagging behind the S&P and the Nasdaq, right? So that's why I like these plays maybe even a little bit more than the S&P or the Nasdaq. So we do have some comments. Elafi says, does the Edge Finder agree with GBP down? I don't remember. So the Edge Finder doesn't agree with GBP down. It's actually GBP up. If you go to the UK economic heat map, you can see the GBP impact is actually bullish. Okay, so 71% of the data, okay, it now updated as well. I think it did. Oh no, sorry. I mixed up the US and the UK. GDP today came in bearish. It used to be bullish, but even with a bearish GDP print, we're still getting an overall bullish reading on the pound. And that's one of the reasons why I personally have bought the pound US dollar, right? It's one of the reasons why I like a long play on the pound US dollar. So, yeah, Elaf, you can just take a look at this if you want, or if you want an assessment of, let's say, GBPUSD, kind of neutral reading, but I'm still bullish, to be honest. If you want GBPJPY, I know that's a pretty popular forex pair, also neutral, but I'm bullish. I'm bullish on the GBP. I just like these numbers. You know, I like these numbers. I like how things are coming out, and I like this indicator on the bottom. Okay, Kevin says we may have this correction with the actual environment and fill the gap on the S&P 500. Yeah, absolutely. I think you are referring to this gap right here. So here and here. I think this is the gap that you are referring to. It also should have printed on the Nasdaq. Yeah, it's right there. So we could pretty easily retrace back into that gap right there. That could be a level. If we do get that, I'll of course be stopped out of my position because I'm looking for a buy position a bit higher. So I'll try to get in again, to be honest. I mean, if the macro environment is still risk on, if the tariffs are not crazy, if things are going okay with the tariffs, if there's no major red flags, I would be pretty happy to still look for buys on the S&P. And I don't mind getting in multiple trades. You know, I'll try a buy setup here. I'll probably get stopped out in that case. I'll try to buy again. So it doesn't matter. I'm not placing huge positions. I do think that we're going to hit the all-time high. Let's actually switch back to the S&P. I do think there's a high chance that in the upcoming few weeks, we're going to hit the all-time high. And then we could get that retrace. We could get that pullback. We could get that correction. One of the issues that I see is the momentum is dying down a little bit. You know, here it was massive momentum, small pullbacks. Now it's small momentum, trickling to the upside, possibly moving in this sort of ascending channel fashion, you know, kind of ascending to the upside, which is not really the best scenario for a bullish case. So we will see. We will see. Again, I'm looking for pullbacks. I'm looking for buy setups on the indices. The next thing I want to comment on is going to be the metals market. Okay, so it's going to be gold. It's going to be silver. Let me check the camera if that is working. Yep, still working. Okay. So metals. We can do gold first. Fundamentals. In terms of fundamentals, top setups. Gold. Bullish. Getting a bullish reading. Main reason is commitment of traders. So the institutional money is long. Seasonality is good as well. PMIs, inflation, interest rates. You know, it's not the biggest bullish reading, but it's still bullish. It still looks okay. Silver is bullish as well. Wow, silver is bullish. Okay, nice, great. Let me just see what happened. Why is it bullish now? It used to be neutral. Something has changed. Let me see that. Okay, score went up. Interest rates went up. Okay, interest rates. It is because of the 2-year, because of the 2-year yield. That means silver has become more attractive. Silver has become more attractive because the yield has went down. The 2-year treasury yield has gone down, so the attractiveness for, let's say, metals has gone up. That's how this thing is calculated. So silver is looking okay right now. But let's first do gold. I kind of touched on gold at the beginning of the stream. I told you I'm a bit neutral. I think gold is looking a bit range bound. I think it's looking a bit flat. So I'm being patient right now on gold. I don't see a big reason for gold to skyrocket. The world is doing okay. Tariff news is doing well. There's no major drama going on. You know, countries seem to be signing deals. We had the US and China trade talks. Yes, it turned out with massive tariffs, but still that is kind of behind us. So the big uncertainty is also behind us. And the one thing that markets hate the most, it is uncertainty, right? It's not really an issue if Trump puts huge tariffs on China. It is the actual uncertainty of what is going to happen in the next 1 month, what is going to happen in the next 2 months. Will he raise the tariffs? Will he lower them? Will China do a lot of retaliation tariffs, right? So it is the uncertainty that creates a risk-off environment. And right now, I think we are in a risk-on environment. So I'm being a bit more patient on gold. If we do breakout, if we do show bullish momentum, then I could start considering some buy setups. You know, one thing that you have going for a bullish case on gold is a weaker dollar, right? So when the dollar loses a lot of value, like it has been doing for the last couple of months, gold usually goes up. That's just how things work. So gold usually goes up, and it definitely has been going up, except it has been crushing the dollar, you know, with much more percentage. So I think the dollar in the last few months lost around 10% in value, while gold gained around 30 to 36% in value in the last few months. So gold has been definitely a top performer in terms of the last few months of trading. I also had some nice setups on gold. I had some nice buy setups. I took some pretty healthy percentage, so pretty happy about that. And I'm going to be looking for the same thing if we do breakout. And if I do have a case to buy gold, if there are some major issues, major crisis, that could be enticing for gold. Now silver is a bit of a different scenario. Silver I like right now to buy. I think silver is a great buy at this point, not at this level, but at this point in time. There's a couple of reasons. But the main reason is that silver is lagging behind gold. So gold had the huge uptrend. It already happened. We went up massively. We went up with massive percentage. Silver was a bit flat. It was a bit more corrective. You know, it wasn't really the greatest. Then we also had this super flat range right there. We also had the super flat range. And we finally broke out of the range. So we finally got some nice bullish momentum. We finally got some nice blue candles. So I think this is pretty healthy. This is the daily chart. If you also want to get really technical, you had a V reversal pattern. V reversal pattern is a bullish pattern. It's the same thing as a head and shoulders, same thing as a cup and handle. I mean, you can paint an inverse head and shoulders, left shoulder, head, right shoulder, breakout. So your neckline would be, I don't know, let's say somewhere here. Oh no, what is this? Anyway, your neckline is somewhere here. So it's all the same thing, but with a different name. That's bullish. I would like to see a bit of a pullback. I thought about getting in buy setups right here. We had some flags on the 1 hour chart. I was looking at them, but I just decided to be a bit more patient. We were very impulsive. This was a lot of momentum. This was, if I bought here, I would be buying like straight on the highs, you know, straight on the highs, which is not something that I want to do. You don't get a good risk to reward by doing that. Instead, I would like to see the price pull back a little bit, catch up to the 20 EMA. The 20 EMA is a nice indicator of showing when something is overbought or oversold. So if the current price is very far away from the 20 EMA on the daily chart, there's a pretty high chance that a pullback will happen. You know, there's a pretty high chance that a pullback will happen. So I have my alert set. And if we do hit this level, I think it's a nice healthy area of support. And I would be looking for entries. Right? Like this. That's the game plan for silver. If silver wants to continue up without me, I'll look for pullbacks along the way. You know, I'll look for pullbacks along the way. Hopefully we do get some pullbacks. Hopefully it's not just a straight shot. Hopefully it's not just a straight shot to the upside with massive momentum legs and minimal pullbacks, and which would enable me to actually get in on a silver buy setup. So yeah, that's about it. If you also want to take a look at an interesting chart, it would be XAU USD dash XAG USD. This is the gold to silver ratio, okay? You can see that currently gold is worth a lot more than silver. For example, here as well, it used to be worth a lot more than silver. The equilibrium should be, I don't know, somewhere in the middle of this range, like here. I do see this chart going lower, you know? I think there's a big chance that this chart could go lower. What does that mean? It means that silver will gain more value compared to gold, okay? So silver should go up and gold will possibly be flat, right? That gives you a lot of opportunities to be a buyer of silver. That gives silver a lot of room to go up. Another cool thing is, yeah, we're nowhere near the all-time high, you know? All-time high was there. We're nowhere near that. We have a lot of room to go. You don't have a lot of resistance areas anywhere here. So imagine if we do hit this high. Imagine the risk to reward that you can have if you successfully enter on, let's say, the daily chart or the 1 hour chart. So there's a lot of potential for silver. Okay, so that's it for the metals market. Let's see if the camera is doing well. Okay, camera is still working. That's kind of it for my fundamentals strategy. Now you know what I'm looking at. I do have free trades running. All of the other ones are not yet near my entry level. Okay, so what I do is I put a yellow flag if something is near my entry level, and I put a green flag if I'm actually in a trade. So nothing is really near my entry level, but I have my alerts, so I'm just waiting for the alerts to activate. I'm gonna also put an alert on silver if it does decide to break to the upside. For the Zentum strategy, okay, for the strategy that we teach at Zentum, I'll quickly run through the Forex pairs, and my favorite is gonna have to be the euro-dollar. The euro-dollar is definitely my favorite out of all of the Forex pairs. It had a really nice uptrend. You had, again, some bearish dollar news for the US dollar, but bullish for the economy. That would be inflation print, PPI, inflation print and PPI. That made the euro-dollar go up a lot. For today, we're up around 0.7%. That's a lot. I didn't get in anywhere on the uptrend. I was definitely looking for potential entries, especially here. I was looking for some flags, some break and retests, any sort of an entry on the 1 hour chart. We didn't get that. We broke the high, left a huge wick and retraced, unfortunately. So my game plan here is I would like to see the momentum continue up more and then show me an entry. I do think this chart has a lot of potential. We also just broke out of this strong resistance right there on the daily. Yeah, there's quite a lot of room. We could go up all the way to these highs, you know. I could see that happening. I could see this chart going all the way to the highs. It would be good for me as well because in Croatia we use euros, so if euros appreciate, it's kind of good for your purchasing power, right? If you're buying shit from the States or just in general, I do think it would be it would be okay. Yeah, the rest of the pairs on the 1 hour chart, again, GU kind of corrective right now. Aussie dollar also very flat, very corrective. JPY pairs, yeah, kind of not moving with that momentum that I'm looking for. EJ is pretty interesting. Again, EJ is another currency pair that has the euro in it, and lately the euro has been doing pretty well. Maybe it has to do with the European Union spending a lot of money and really boosting the economy, you know, in terms of the military. I saw some other spending as well that they were going to introduce. So yeah, that's definitely good for the European economy. That's good for the euro as a currency. If the government spends a lot of money, it's usually bullish for the economy and for the currency. Except in the United States, because the debt is massive, so you never know what's going to happen if they increase the... I mean, it should work the same way, but increasing the debt to enormous levels for the United States could be problematic in terms of investor confidence. So a lot of investors may be spooked. They may be spooked by, let's say... oh my God, I lost the thought. But basically, they may be spooked by the debt, and then they could pull their money out. That means the price could go down. But that's a whole different story. To be honest, I'm just focusing on fundamental data. I don't care about investors potentially pulling out their money out of the United States. It's something I cannot control. It's something I cannot know. It's something that I don't take into account at all. I don't think there's a huge trading edge behind guessing if maybe a lot of foreign investors will pull out their money out of the States. So EJ, definitely moving up, but pretty correctively. We did have this flag print right here. It would be a nice trade. Yeah, it definitely would be a nice trade. Little flag right there on the 1 hour. I didn't take it because I saw too much selling pressure, and also overall price action was kind of flat and range bound. This was the flag. Other than that, I didn't see any entries. We are kind of more ascending than really trending up, right? More ascending than actually trending. The daily, whoa, approaching major resistance level, to be honest. This high, expecting a retrace at the high, definitely. but it's moving to the top of the range. If you take a look at the JPY pairs, they've just been mostly flat comparing to the dollar pairs from July 2024. Especially EJ, just going from one extreme of the range, you know, from the lows to the tops of the range, as you can see that right there. So that's about it for the currency world, or for the Zentum strategy. The euro dollar is my definite top pick. And now let's do some more relevant. So let's do some more relevant assets. S&P 500, we covered. So we covered the S&P, and also if you guys have any last minute questions, any chart requests, make sure to put them in the chat, because I'll be wrapping up the stream in like 5 or 10 minutes. S&P 500 we mostly covered already. Looks pretty bullish. Looking for buy setups. I'm looking for buy setups on the Nasdaq. But the S&P 500 is a good indicator of how the economy is doing, or how, let's say, of what is the risk on or risk off market, right? Are we in risk on or are we in a risk off market? S&P is heavily going up, so risk on. VIX is going lower. This is the volatility of the S&P 500 index, right? It is something that a lot of traders watch. A lot of traders pay attention to the VIX. And as you can see for the VIX, we are getting close to these lows right there. We are getting close to these levels that we were at in, let's say, January of 25. If we can get even lower, well, I'm not sure if that's really good. You know, it could be then a very slow grind to the upside if we do go to really low levels in terms of volatility. A great article, I remember a great article from Vuk Vukovic, okay? I've had him on the channel for an interview as well. And he is saying that we can expect a low volatility, slow grind on the S&P 500, which is not the best scenario, you know, in terms of price action. This was a very nice uptrend, very clean uptrend, a lot of momentum behind it. This was 24. See, 24. So 24 was massive. 24 was great. But then a slow grind, a low volatility, slow grind would be something that we're getting right now, that we have been getting in the last few weeks. It looks like this. Maybe some corrections, you know, just slightly going up, but not really moving. Slightly going up, but not really moving. That's not the best scenario for trading. If you were trading the S&P in this area, right there, you didn't have the best time. Okay, you didn't have the best time because there's not a lot of stuff that is moving. You could trade options, you could trade premium, you could bet that the price will remain with low volatility and that the price will remain range bound. It's not something I'm doing. The reason is I don't have enough capital and prop firms don't allow you to trade options. If I had a lot of capital, I would most likely deploy some option strategies. They're very interesting. I would definitely like to get into that. I just don't have the capital. With options, you can actually bet that the price will stay in a range, right? You could bet that the price will stay in this range, for example. And you could collect premium. You could collect, I don't know, every day or every week, a couple of €100 every day, or let's say every week, depending on your capital, of course. As long as the price stays in this range, you can just keep collecting the premium. So options traders would possibly prefer a flat market. I wouldn't. I would like to see this happen again. You know, I would definitely like to see this happen. This was a very slow grind after a correction. This was then a great push to the upside from COVID. I mean, just a massive explosion to the upside. This would be an example of a low volatility, slow grind. This, again, low volatility, slow grind. This was kind of slow as well. So from May 19 to October 19, very slow grind. You know, we do end up being higher, but it takes a very long time and you're not getting a lot of opportunities. Okay. Just close this. So the VIX I covered. Possibly this is the best area for the VIX to be at. I'm not an expert, so I'm not really 100% certain, but I don't think we want the VIX to go extremely low. Okay, I don't think we want it to go extremely low. We do still want a little bit of volatility, meaning some nice uptrends. I may be wrong. I'll have to check that. Gold we covered. We covered the metals. Currently not touching gold. Possibly preparing for a buy position if we do get fundamentals. If we do get a risk off environment. Ethereum actually had some bullish price action. So Ethereum actually had some bullish price action. We had the massive breakout on the 8th of May. I know Griff from Zentum Trading, he was pretty happy to see this. He's invested in Ethereum. So this was a great move for his portfolio. Now we're getting a bit of a breakout as well. So in June, okay, 9th of June, 10th of June, I think Bitcoin is a better play. You know, I'm in a buy trade on Bitcoin, so I'm definitely betting on Bitcoin to go up. Ethereum, I have some long-term holds for Ethereum right now. Am I trading it? No. Is there potential? Yes. But I do think Bitcoin is a better performer. I do think Bitcoin is stronger. Ethereum does have a nice risk to reward if you want to play that. If you want to play it to these highs, it could happen. It could definitely happen. So Ethereum is interesting, but it's not for me. Let's see, what does the Edge Finder say? Do we have Ethereum here? No, only Bitcoin. Okay, doesn't matter. US oil. US oil is something that is interesting. US oil, on the daily chart, it's actually going higher. It's actually breaking higher. So oil prices are going up. That means more expensive gas at the gas station. That could mean higher inflation as well, because oil prices have a pretty big impact on inflation, not just in terms of energy, but in terms of transport. So every single price can go up, right? Because all of the things that we eat must get transported using trucks or planes or trains. All of those things consume some sort of, let's say, energy source. And it's, in most cases, it's going to be oil, right? It's going to be oil. So oil going up could signal inflation creeping higher. So far, we're not getting it in the prints of US data. Possibly looking for buy setups on oil. You know, if we look at the fundamentals, oil actually getting a bullish reading. Institutional money is long, retail is short, so you want to do the exact opposite. Seasonality is good, GDP is good, retail sales, employment change, interest rates. So that's all doing well for oil. That's all doing good. We also had a breakout of, I think, this trend line right here. If you're watching this trend line, we broke it with a lot of momentum. Another trend line you could pay attention to is right here, like this, but there's still a lot of room until we hit that one. Whoop. So I would consider possibly getting in after we retest this level. So let me put in an alert. Let's put in an alert right there. Let's see if that happens. A play would be for us to retest this level, bounce, get an entry on the 1 hour chart. That could be interesting, right? So that could be a nice play for US oil if we get something like this. I know I had my alert. It got activated with this push. Now I want to see price retrace a little bit. Again, I don't think it's the smartest thing to buy right on the top of the move. Buying into this massive strength. I would prefer to first see a bit of a pullback but this does have potential to go up. Even if it just goes up to this level. You know, if I catch a nice risk to reward, like a 2 to 1, let's say, it's still a pretty good trade. Anything above a 1.5 to 1, in my opinion, is a good trade. In my opinion, it's worth it because with this strategy, the win rate is around 50%. So if you can get your risk to reward to be above 1, you're onto something. It makes sense to take the trade. So yeah, that's kind of it. Do I really love US oil? No, I have other favorites. My favorites are here on the top. But I have the alert. I have the alert set and I'll consider getting in. The DXY we covered. I'm very bearish on the dollar. I do think the dollar is just gonna continue trending lower. I do think that the dollar is very weak. Problem is you're getting some tariff scares, which is bearish on the dollar. You're getting technical trend, which is massively bearish. You're getting fundamental data, which is coming out which is coming out bearish for the dollar. Fundamental data is coming out bearish for the US dollar. There is support, right? There is some support alongside this area. So we are right at the support level. But if we do break it, we could melt down a lot lower. You know, we could definitely melt a lot lower. I could see that happening. I could see the meltdown all the way to this area. Could we go even lower? Yes, of course. Markets can do anything. So we could even touch this level if we get that meltdown. I know a lot of people are betting for the dollar to bounce a little bit, go back into the range. We will see. No one knows what will happen. I just know a lot of stuff that I'm looking at, a lot of confluences that I'm looking at are pointing to a bearish dollar, right? They're pointing to a bearish dollar, especially fundamentals, especially the fundamentals. Japanese index kind of flat, kind of range bound. I cannot really get a reading on the Japanese yen. If we go to the Japan economic heat map, okay? Japan's economic heat map. If we check that out, we can see actually the JPY is catching some bullish data. Yeah, definitely catching some bullish data. PPI came in bearish for the yen. GDP came in bullish. So yeah, okay. We're getting basically no contraction or no expansion in the economy. We got the 0.0 print, but the forecast was a negative print. Household spending came in also bearish for the yen. That's interesting. I mean, the yen was pretty weak a couple of weeks ago. Right now, it's catching some bullish momentum. So slowly creeping into that bullish, territory. That's why you can see it being kind of flat in the charts as well. You know, it's kind of bullish, but not really bullish. Currently, we're in a risk-on environment. The yen loves a risk-off environment, okay? The yen tends to appreciate when there is a crisis, a war, trade wars, people flocking out of the United States, and then the yen goes up. So I cannot really give you a clear reading. The DXY is pretty easy to read right now. You know, the DXY is pretty easy to read right here with this massive sell-off, with the massive bearish momentum, but the Japanese yen index is neutral. It's a bit neutral. For anyone that's wondering, for anyone that's new, so these indexes measure the strength of, for example, the yen relative to other currencies. Okay, the strength of the yen relative to other currencies. I'm still long on NJ. I'm still long on the New Zealand yen. I'm still trailing my position. I think it's a fine play. New Zealand dollar has good fundamental data. Risk on environment suits the New Zealand dollar because the New Zealand does a lot of exports. So if the economies are doing well, that means it's risk on. That means New Zealand dollar should go up because a lot of people are, let's say, buying the New Zealand dollar. Okay. So NJ is still catching a bid. I would definitely like to see it go to these levels. At that point, if that does happen, I would take I would take my position off. I would close my position. US 10-year, it's kind of the last thing for today. So if anyone has any last minute questions, if anyone has any chart requests, put them in the chat right now and I will take a look. So yeah, the last one for today is going to be the 10-year yield, the government bonds, US government bonds. This thing is a bit, I would say, flat right now, which is not so bad. A big issue would be if we do start creeping higher. That's a big issue for that's a big issue for the US, because if bond yields go up, that means the United States needs to pay high interest rates on the debt. Okay, they have a lot of debt, they need to repay it, and if the interest rates are extremely high, that's a major issue. So the best thing for the United States would be if the interest rates do go down. If the interest rates go lower, that's a good case for the United States. That means the interest payments become lower and they need to pay less debt. Okay, they can even maybe possibly borrow more money, right? So we would like to see the US 10-year go down. Let me just check TLT. TLT is an ETF. Okay, that's an ETF where you can trade the 20-year bonds. You could also do 10-year, right? No, it's only 20. Anyway, so yeah, if this thing goes up, the yields go down. It's an inverse relationship, right? You can see this thing is going up. That means, for example, the 10-year is going down, okay? Elafis asks, when do you look at the 2-year or the 10-year yield? Let's look at the 2-year, US 2-year. It's the 2-year yield, US 2-year. I'm not sure what the ticker is, to be honest. I'm not sure about the ticker. I look at the 10-year. To be honest, you could look at multiple. You could look at the 2-year, the 10-year, the 20-year yield. I think the 10-year gives you a nice indication of what is happening. I think a lot of traders, a lot of investors do pay attention to the 10-year yield. Again, it's somewhere between the 2 and the 20. It gives you a nice happy medium, right? I believe Trader Nick also looks at the 10-year yield and he knows much more than I do. So I just basically took what he was doing and implemented in my analysis. So that's why I have the 10-year. And I think it's the best of both worlds, you could say. It's somewhere in the middle. The middle gives you a nice indication. If this thing is going up, you know that the United States has some problems. You know that the debt that they're paying is getting very expensive. If this thing is going down, that's pretty positive for the United States. United States would like to see the yield go down. Okay, they definitely want to see the yield go down. So you could kind of see the health of the United States through government bonds. You know, if the yield is going up, the United States is not doing so well. If the yield is going down, the United States is doing well. It's managing to borrow money. People are buying US debt. The United States is using that money to pump it into the economy. Economy is expanding. People are earning more money. Companies have more money. Okay, they have more money to spend, and everything is happening as a catalyst for the United States economy to go up. Okay, so if the yields go down, it's a pretty good confluence or an extra confluence to be a buyer of the US stock market. It gives you more confidence that the US stock market is safe, that the economy is expanding, that companies are doing well, that companies are spending a lot of money, and that your investment will grow. right? That your investment will actually grow to the upside. Okay. So that wraps things up. If you guys wanna get my daily forecasts for absolutely free, make sure you join Zentum Trading. Okay. Every single day, I do a deep forecast in our Discord of what is happening in the markets. Let me put it in the chat as well. So what is happening in the markets, which trades I have taken, which trades I'm looking to take, which assets am I looking at, what looks good, what looks bad. You can get that for absolutely free if you click on become a member and then click on free access. Okay. So you can become a free member and you can get that. Thank you guys very much for watching. For all of the updates on the stream schedule, you can find me, I'll put it in the comments, Marcos Trading Journey on Twitter, on Instagram, sorry. So you can find me on Instagram. I post all of the updates on my Instagram. Elafi, thank you for your analysis. This was very interesting. No worries, Elafi. I'm glad you enjoyed it. Thank you everyone for attending, and I will see you guys in the next stream.